Okay. Can you guys hear me? You're still there? Sorry about that. The computer actually did crash. Just let me know if you can hear me all right. And I'll make sure. Try for a second time. We should be good to go. I reckon I've got a problem with my CPU, to be honest. I think something's about to go kaput. All right. See if it works now. Good. No worries. All right, we'll just get up and running. Sorry about that for anyone that's was there a second ago and it's just been logged out. Yeah, a few little issues, a few technical issues which you tend to have. The computer gets a bit old, so I might have to sort that out soon. And oh, that's coming through. Good. Share the screen. So that's enough of this trading view. Just kicked me out. There we go. All right, so let's get into it. Thanks for joining me. This is a trade setup morning. I was going to say jumpstart morning playbook. G'day, Peter. Now, I just want to go through obviously a few different things. I'm going to have to use the same chart. Just the key markets that are moving and what the overall markets are looking like now. US didn't do a lot last night, but again, it's starting to pump up out of ours. So it seems to be a bit of a routine for the Dow. They will jump in after hours, try to push that index up, and it happened yesterday. Bit of a flush out. They will tend to flush it and then go. At the moment, it looks like it's retested this support zone, which is quite important, around 25.60, 645 or 650. Okay, on the E-mini, sorry, on the E-mini, the Dow Mini. And you can see longer term, actually, we've got some, trending resistance or sloping resistance down. We've got a key inside level, which is holding at the moment. And for all intents and purposes, it looks like it's ready to pop. It's just got through this inside level around 2600, thereabouts. And we've got another inside level where, if we can get through that, it could be on again tonight with a bit of a rally. I think 2 nights where the US is not doing too much is too much for them to handle, and I think the bulls will be out to play again if this starts to break higher. Now, what they'll tend to do, one way or the other, if they want to clean people out, the market will gap down out of ours. So when the US starts to open, the overnight markets are down quite hard, like we saw with this sell-off. Where is it? Back here. Big sell-off back there. The markets, gap down and then they'll rally up into the close, or they get supported during the hours. Now, if they want it to, obviously, if they want it to rally, it's a good thing just to, when an illiquid market out of ours and the China into Asian session, with Chinese markets, drag it higher out of ours, and then when the US comes open, it's actually gapping up slightly, and it sort of creates that euphoria for the bulls to continue the charge. So that's what I'm looking at. I think, definitely that looks like it's supported. If we go on to the Hang Seng, which I like to look at as well, I like the trade. That's the same sort of scenario, it looks like. Same sort of scenario. You've got a resistance level that's coming through around 24,450 and an inside support, at holding, which is key, holding around 24,100. Okay, so this also, if you start to draw a couple of trend lines on it and see what's going on, it looks like it's starting to break out, up and out. Now, I think China came out yesterday and said their Reserve Bank's going to support, throw cash at it to make sure that, make sure that lending is freed up. So that's helped out a lot of the commodities. If we go and we're going to look at copper soon, oil, all kicked off, obviously, when China says they're going to be okay. That increases demand for those commodities. So that's the Hang Seng. We've got the XGO for today. Anyone looking at that? Not looking as pretty, but nothing like a little flash, flush out of the lows. And you can see that it sort of swept out that level there. Now, if that holds today at around 59.26, 27, we could see a bit of a run higher. Also, don't forget, anyone that knows what triple witching is when I think it's futures, options, and there's one other that expire on the same night, and that creates a hell of a lot of volatility. So you might see the market really choppy tonight. So just be careful, or even coming into the session through European trade as well. It could get very choppy with all those expiries going on as the bigger market makers and things start to muck around the options prices and futures prices, and just argy-bargy it goes on, which could easily happen. So just be wary of that. We had our rollover on the contracts from, was it June to September yesterday? So it was a slow open yesterday. So if the ASX, this looks like it's a sell. To me, we've got market popped up, held an inside level, retest. So you got the little retest fail up here at around 59, just under 6,000, fail through, pop back up into the zone, and potentially look like it's holding a lower high. But the way the US is going, if they're going to get dragged up, we're going to get dragged up. You would expect get dragged up with it. Go over and we'll look at the other moving things. Important, copper. Like I was saying, copper's starting to push higher. The good thing is we're looking at this resistance zone, which is from way back at, if you can see it, just before the sell-off. Probably can't get back on the 30-minute chart. Let's go over to a 4-hour chart. For anyone that's new, this is the level which it was holding. So all that trade, turmoil with the US and China was, put pressure on it, and then you come out, went into lockdown, boom, got absolutely really sold down hard. Now that everything's starting to look rosy again, we pushed right up and through that lower high at around, was it 2.6263? Okay. Now we busted up and through, pull back, and we're starting to hold a higher level now. So if this starts to get back up through this zone around 22.62, 620, then it's bullish. And I think the news on China is going to be bullish for commodities a bit because they're obviously increasing demand. So we'll just see if what happens on copper prices. Over to crude oil, it broke up and out. So we'll talk about this yesterday. It was that point of agreement between bulls and bears. You've got support, lower highs, higher lows. So once you get that point of agreement, it's going to go somewhere. You can't just come to a point and go sideways. No one likes a sideways market. People want to make money, whether it's up or down. So we were leaning towards the upside on this when we were speaking about it yesterday. And lo and behold, we popped up, pulled back just to flush out a few longs, and then bang, up we go. And that was strength in the US dollar against sort of the strength in the US dollar, which is a bit unusual at the moment. And I think that's more just to do with it's been supported by what's happening in China. And that bodes well for higher prices on equities as well, the way we're seeing the Dow set up. NASDAQ into new highs, just keeps chugging away. There's just no stopping the market at this stage. It's easy to say, I've been spruiking that for a while. The fundamentals are not good. High unemployment. GDPs in the US is going to drop. They're expecting unemployment around the 10% mark by the end of the year still. There's a few people going back to work. There's going to be a few people that won't go back to work. So there's some problems. You've got riots, all that sort of stuff. But the market is still going higher. We're looking past pretty much everything at the moment. Don't get me wrong. I think this is going to come crashing down hard and fast soon, and it might catch a lot of people unawares. But at this stage, we can't argue the market's going up and it's bullish. People want to buy stocks, whether it's free cash they're using, whether they're bored at home, who knows? Whether it's your Robinhood traders in the US supporting it, we don't know. But either way, it's still going up. We've got, that's crude. We look at gold. Gold didn't trade nicely to a lot of people last night. We got a bit of a flush, obviously resistance zone at around 1732, flush drop. Okay. And that's more to do with the US dollar strength. But even though the US dollar, to me, looks like it's heading higher, which we'll take a look at in a second, gold is not going down. Okay. So we've got maybe the tide is turning. I don't know, where it's not going to be linked to the US dollar anymore. It's going to just be linked to safe haven. Because basically, if the market's going to melt down, gold traditionally should be that safe haven, but it's not at the moment. It'll come down because the US dollar is getting bought up. And that's what we've seen in the past, and it's still linked to the US dollar as such. And that's why you got the sell-off here as the US dollar rallied. Now, the US dollar has rallied, continued, and gold is still holding up, above this low at around 17.13. And you can see the algo's chipping away at it, still trying to push it up, So a bit of a flush. It might just drag in a few buys, squeeze them out to push it back down, and we start the process again, start to run up. But we'll just see what happens tonight. So either way, we've had a couple of nibbles at this, one profit, one loss, or one break even, I think, thereabouts. But it's just not getting the move on anywhere. If you think there's going to be a good rally in the US dollar, you should be short gold the way it is at the moment, but it's not. It's getting supported up. So any spike low is getting bought straight back up again. We saw that Here got bought straight back up. Here got bought straight back up. You chop around, flush, straight back up again, flush high, down. We're getting bought back up again at the moment. So it's making it hard going. If you want to buy it, you can get flushed out, or you're stopped out when it spikes lower. And if you're looking to buy on that break there, you just got flushed out as well potentially. So otherwise, you've got a massive stop on it. So it's tough going, but we'll just see how this unfolds. It needs to get up, pull back to this zone, for instance. If we're going to do that, I'd rather see that sort of flush back up, pull back, and then start to hold that zone for a potential buy. Okay, and then that could really trigger a bit of a move on with the bulls and market to really flush up through 1750 thereabouts. But we'll have to see. I'm keen to be looking at high lows or lower highs just for more confirmation to the market. Because it is no getting around it. It's tough going at the moment. You're fighting the Fed if you're bearish, and you've got every reason to be bearish. It's just that the simple fact is it's not going down. What else we look at? We've got crude. So let's go into the currencies now. The US dollar is a big marker. Look at that. We were talking about this yesterday, getting supported. Did have a bit of a bounce, flush down, and currencies will do that time and time again. During the Asian session, it looks like a setup long. You go long and it'll flush lower, come into the open of the European session, and then make its move back up. And that's what it did last night, the US dollar. Bit of a pop. It was looking good. We had a trade short on the euro, got stopped out, and then sure enough, later on it started going straight back down again. So we got stopped out by a few pips, and then boom, went straight back down. Would have been up 40 or so. That's just the way it goes. It's still worked out fine. The idea was still there. It's just the timing is wrong during the Asian session. It can be really tough to time. But yeah, the US dollar went up as we thought. Now we'll see if this contracts lower, just to flush out some of these longs, and then starts to ramp back up again into the European session, which means more pressure on the euro, more pressure on the Aussie, and so on. So that's what we'll be looking at. The US dollar, I think it's creeping up. And if we start getting a bit of a big sell-off into equity markets, expect that to start really getting a move on to the upside. But like I said, if the Dow starts creeping up again, starts to break up, that it's going to bring any sort of safe haven buyers recently into the dollars, probably going to squeeze them back out on the downside. So just keep an eye on how all those markets are linked in together. Aussie, bearish on that, just because we've been up at this 70 zone for a while. We're chopping around here. It hasn't quite turned. I mean, it's still holding that trend quite nicely. Hasn't fallen over, so this could just be a big setup. It's just setting up for a bit of bring in some shorts and turn around and squeeze them back out. So there is a lot of signs saying we're still got more to come on the upside into equity markets. I mean, the Aussie sort of longer term, it's just consolidating around these highs below the 70 cent level. And we could be ready and raring to go. I mean, this looks a lot like that Dow and the Hang Seng charts to me, which to me looks like if we start to get a squeeze up, then on we go. And that would bear down on the US dollar. We're selling into the US dollar, so we'll see. And the euro, much the same. It's creeping off these highs, and that's I haven't got it drawn up, but that's a key high up here. Go back to a longer term chart. We've been up around this zone before a few times. We're 1, 2, 3, push through it, straight back down again. We're back up there, or we push back up there. So it's got a lot of long traders built up, a lot of buyers built up that can get squeezed out. And that's potentially what it's trying to do now, just squeeze out a few of these late buyers. Anyone that bought it late into that trend, getting put back on the sidelines, may bounce off the MAs and go. All right. But again, it's going to be linked to the US dollar and what the overall market's doing. But again, that sort of creeping lower is not serious selling for me. It's more the sellers getting soaked up and buying on the way down. So any sort of market that tends to go, have a good run up, and you can expect, and then you expect it to come down hard, you'd expect something like this, okay, to really put the squeeze on these buyers that are built up. But when it starts to go differently and it starts to grind, that's not what you want to see as a bear, because more than likely it's going to hold an inside level and then bang, up we go and squeeze anyone that's been selling through here, build it up, build it up, build it up, short position, bang, straight back up. Okay, so you don't want to see that grind, and that's what we tend to be seeing sort of on the Aussie. We've seen that on the euro. We've seen that on the Dow. So yeah, we'll just have to wait and see. I think I'm sort of don't want to, but I'm leaning bullish on the US market at the moment. We'll just see what it does overnight. well, their night session, which is the Asian session coming. All right, guys, that's probably about all I wanted to go through. I mean, not much to talk about the pound. Pound, we've got there was news out last night. They're keeping their stimulus going. They ramped it up slightly, which has put pressure on the pound. But again, if that US dollar starts to get weak, expect it to start to get supported. We just have to wait and see. All right, that's about it. Thanks very much for joining me, guys. Hope that when we get back into Monday, so the stream is at 12:30 on Monday for anyone, 12:30 Sydney time. We have a longer stream where we talk a lot more about shares and your bits and pieces, where you can chuck in, like I said, Brian, sorry, your TWE. We'll leave that till Monday. But anyway, so what I want to just get through on these morning playbooks is more about what the overnight market's doing and what we could expect, just to keep abreast of the action and make sure we've got our plan of attack in line. All right, have a great weekend all, and we'll speak to you again on Monday. All the best.